Well, welcome, ladies and gentlemen. We have a quorum. Do I have a mover that we've established that we've got a quorum? Move.
Thanks, Tony.
And seconder?
Sorry, initials, please.
GC.
GC.
Now, the minutes have been circulated, and all I want is a motion that they are a correct record.
I can move that, can I? I'll move that.
Move that, okay.
As always here.
I'll do.
Seconder?
Me.
And move on to the board report, and I'll ask Ivor to give the board report.
Okay, thank you very much, everyone, and thank you for coming today on it's a pretty grotty day out there. This is our 14th annual general meeting of the credit union, and the purpose of today's meeting is to provide members with the opportunity to receive reports on the performance of their credit union over our reporting year, which is to September 30th 2017, and then to take a decision on the dividend that we're going to pay out this year. We also have the election of members to serve on our credit union board of directors. However, I don't think there are any standing this year at the moment, are there?
We've just
we
got
have
one standing down, but we haven't got any nominations.
We have vacancies, but we haven't got any nominations yet. Okay, so key indicators for the credit union. Membership level obviously is one of the main key indicators, and our membership at the end of the year was 2,709. This is an encouraging 5% increase over the previous year, and is fairly consistent. Last year was 3%, so it's between 3 and 5% on average a year. But the board of directors are very aware that the membership could and should be higher. We have an organisation of some 80,000 membership potential. I'm not sure we could cope with that many in one go, but we could certainly do a lot better than we are at the moment. And we've already started formulating plans to boost the profile of the RMT Credit Union. However, there is no better advertisement than word of mouth and personal recommendation. So if anybody is out there and somebody isn't in the union, please recommend to your fellow colleagues and union members to join. The finances. Your board's main duty is to keep our money secure and try to get the best value for both savers and borrowers. Our annual audited accounts follow on the agenda, along with reports of our auditors and treasury team. But here I will give you some key indicators of our financial performance in the year, and at the close of reporting we had £4,589,709, which reflects a growth of 8.44%, which is virtually similar to last year, which I think was 8.4%. On the loan book, we've got £2,242,104, which is an 11% growth. But it's actually important that we try and get more out on the loan book, because that's where the credit union can make its significant improvements in its income, which enables us then to pay out higher dividend. So whilst we're performing okay and quite well, again we could do better. Our expenditure and costs this year were £178,891, which is a slight expected increase from last year, as we seek to take on more of our own costs rather than relying on the trade union, who still very heavily support us, and for that we are very grateful. An operating surplus of £82,262, which represents a minimal drop from last year of just a few pounds, so fairly consistent. Again, I think that's a reflection of the fact that we really could do with getting more loans out there, so the money's not in low payout investment, but actually supporting the members who need loans and actually returning a decent interest to the organisation. So, despite the continued austerity climate forced on the country by this current government, we are overall performing well. However, the key drivers for the coming year must be member numbers and transfer of investments to the loan book. where we can make significantly more gains for the members. Financial performance, the regulations covering credit unions means that our cash assets have to be deposited in the low risk accounts, which are standard accounts and low risk investment accounts, which given the current deposit interest rate gives very little in return. At the end of the year, we had almost £3.1 million in our deposit and current accounts, which yield only minimal returns at the current rates of interest. But on the plus side, our loan book stood, as I said, at £2,242,104 at year end. So our total income was overall £292,453, with an expenditure, as I said earlier, of £178,891, and it leaves us with a surplus after tax of £82,262. We'd like to recognise the contribution made by the trade union at this point, which continues to support our organisation through the use of office space and admin support, infrastructure and even staffing costs. And though it remains a firm part of our strategy to gradually work towards self-sufficiency, we are slowly weaning ourselves, where possible, off the material support we receive from our trade union. The actual item headings of the expenditure are listed and detailed in the accounts, with the big items being insurance, provision for doubtful debt, bad debts written off, FCA fees, subscription to our trade body and administration. Excluding bad debt, the rising figure of expenditure does not only mean that our costs are rising, but also reflects that we are paying more of our share of actual costs from our own accounts. There is always a downside to lending people money, even in a mutual organisation such as ours. Some people find that they can't pay and others just don't want to. But we have managed to control bad debt, and the write-off this year has been £43,513. However, we always keep all doubtful or problem loans under consideration, so they never go away really, and make provision for them. The further provision for this year is £36,500, meaning that the accumulated provision now stands at £92,601.19. Christmas and holiday summer club. Christmas and summer holiday clubs. Our Christmas and summer savings clubs continue to grow, which is very encouraging, and the combined dividends for the summer at 0.7% for both summer and Christmas accounts were £1,317 in total. So finally, I'd like to place on record our thanks and appreciation of the board to the following: General Secretary Mick Cash, who's been a staunch supporter, as was our previous General Secretary, and the National Union for the material support that they and their staff provide to our organisation. To our manager, Nikki, and Stephen, who's over there, and all the staff in the finance department. I'd also like to thank the rest of the board for their hard work throughout the year, and thanks to all of you too for your membership and support of the RMT Credit Union, and in particular your attendance here today. That concludes my report on behalf of the Board of Directors, which I will now ask you to formally adopt, and then we'll move on with the rest of the agenda. Thank you.
Well, you've heard the report, the board report. Are you happy that the report is adopted? Can I have a mover, please?
The figure quoted was 2016 when you quoted the bad debts written off, 4,513. 2017 was 41,637.
No. Have I got the wrong one?
No, what's the date at the front of your what's the date in the front you're looking at? The date on this one?
On the front of the document you've got.
What is?
Well, it's the council.
It's going to be the board.
Oh, there's actually two, because I've got
September 2017. I'm reading from the financial
You got.
report.
Oh, he's reading from the financial report. Okay. So it's not, for some reason it's not been carried across. Thank you for pointing that out, actually. very useful.
In actual fact, it's gone down a bit.
Yeah, which is actually a very positive thing. Sorry?
What page?
Just bear with us. Can't even find it.
Will you look on page 12 in the financial accounts?
Page 11,
Thank you.
member loans section at the top there.
Yeah. Oh, yes. Ah, very good point. Yeah.
No, that's on.
And in the report, it says, as you said, 43,000. So that is an error. Thank you for that. I'm not quite sure how that happened. So we need to amend that to read the bad debt. We managed to control bad debt and write-off this year has been 40. I lost it again now. 41,637.
That's what it says.
No, not in the report. It doesn't.
Oh,
Yeah, it says it on
Yeah,
there, but not in
but
the
not
business
in the written
report.
No.
So I apologise for that. I think that might be my typo.
It's not been changed from that.
Yeah, that's what it is.
2016 to 2017.
Okay, so substantially the report is as read, with the amendment to the bad debt section, which, as Tony's clearly pointed out, has actually gone down to 41,637. Thanks for that, Tony. Are we happy to adopt it with that amendment? Sorry. Yeah.
Yeah, one question I want to ask. Under bad debt, what do you actually do with people who can't pay or don't want to pay? Do you have a system?
Okay, yeah, so there is a process for that. So first of all, obviously, we'll try and chase them up internally. If we don't get any success, we don't have the resources to go through the court system ourselves, so we use an agency who we pay a small retainer per case, I think. Is it the case?
We do both.
What?
Chase.
Well,
go to
initially we chase our own first, but then
and
after
do
that
the
it goes
courts,
to...
and then the debt collection agency.
Right, okay. So we go to the courts first, then the debt collection agency, and after a period of time, if we can't get anything, for financial purposes, it's written off, so it's taken off of our debt book, which is why we have the provision for it. But that doesn't mean to say it goes away. That money is still owing to us, and it's still a live account, and there will still be ongoing processes for, to keep that debt live, so that we can at some point reclaim it, hopefully.
So in about 5 years later, then people would ask for a loan. Would it be noted that?
Well, they wouldn't be getting a loan,
yes.
to be honest. Yeah, they wouldn't get a loan if they've got bad debt.
Yeah,
They absolutely would not get a second loan.
so it come
Yeah.
up saying
Absolutely.
Loan.
Yeah, yeah.
even
Do
if
not
even
give another
5
loan,
years
yes.
later,
We tend to find actually the ones that with bad debt tend to leave the credit union anyway, so they're not actually members anymore. Quite often, well, not quite often, but sometimes there'll be people who move abroad,
they leave.
move somewhere else in the
Come
country. But if they come back, we'll still have that on the record.
Right.
So, yeah, absolutely.
Have a brass neck to come back if you're...
Yeah, you'd be amazed what some people do. They really do have the brass neck.
Question on that, just to follow up to what that guy was saying. But, oh yeah, on the debt collecting agency, are they on a no, if you like, no collection, no fee, or do you pay a retainer to them?
No, we only pay for what we actually collect.
So they
So
have a
they
percentage.
charge us.
Yeah.
Yeah, if they make the money, then they get a bit of it.
Yeah.
Any other questions?
Just on the debt collection agency, have we vetted them to make sure they're ethical and not one of the rough ones who would appear on
No, we have lots of discussions about the
We
agencies
send
before
him
they're
round.
appointed.
No, it is done.
Yeah, we do have lots of discussions about the agencies before they're appointed. We don't.
Questions.
We don't hire blokes in duffel coats to beat people up.
No.
That's not our way.
The answer is they've been vetted. And
Yeah, absolutely. They're all reputable credit agencies.
We make sure that if they go round to the house, the guns have only got rubber bullets.
Yeah, so yeah, it's a
No,
valid
it's
point
not.
though. Actually, there are some strange people out there.
Any other questions? Can I have a move then that we accept the reports?
Wally?
Thanks, Wally.
RGC.
GC.
Second.
I remembered you at GC.
Sorry, what's your initials again, sorry?
RGC.
LGC.
RGC.
GC. Yeah. Great, thank you.
We'll come on to Treasurer's report, and I'll ask Ivor to give that.
Oh right, I thought Phil was doing that.
Yeah.
Phil can do that.
Phil doing that.
Phil's doing.
Trying to give me all the limelight
Yeah.
because the cameras are here.
No, right, okay, so I make a verbal report to each Board of Directors meeting. We meet every month. There's also written published figures every month given to the board. Generally, it's just to let them know if there's anything that is perceived to be problematic or unusual. If it's the general monthly normal expenditure that we get, it's in the report. If anybody asks any questions on it, then we'll normally get the detail that they require. The main thing that we tend to discuss at board meetings tends to be debt, and if we've had any particular problems highlighted with debt. And the other thing is to make agreement on investments, whereas we're always trying to spread the risk and get as much return as we possibly can within the constraints that we have as a credit union. So we are quite constrained. There's lots and lots of accounts out there that we're unable to actually put our money into. Because of that, it does tend to mean that we have quite a low return. And on the investment book over the year, it's averaged 1.1% return, which isn't great, but that's about the best that we can do. And they generally tend to be investments over a 12-month period where we tend to buy an investment bond. That tends to be the type of product, but it's safe and it gives a guaranteed return within the rules. That's what we're allowed for. So I've listed here in the report the bank accounts, and you'll see some of the accounts. If I look at one there, Santander bonds, and it'll be the same amount for both years. Now what happens with some accounts is the interest payment from the account gets paid into our general pot, and for others they put it onto the balance that's currently in the account. So for some of those you'll see, so Allied Irish account, any additional monies that account's made has been left within that account, whereas Santander bond, the dividend payment that they've paid on our investment has gone into our general fund. But in the overall pot, it still sits there as far as investment is concerned. We do have one slight difference in between what the accountants consider and what we consider year-end on investments. And as I recall, I think we put 100,000 into one account, and I think topped up from 80 to 100,000 in another account, which is why we have a slightly different figure shown. Further down on page 4, as I've explained, we've got a range of investments with the banks, investment firms, building societies, from which we obviously get an interest return. And we look at that continuously. So I have an account with Moody's, which is looking all the time at what the sort of risk ratings are with different organisations where we may put money. Having said that, I can remember we were going to put some money in the Bank of Cyprus, and it gave a medium-term low risk, and the following week the bank folded. So as it turned out, it's only a guide, and all we can do is use due diligence to spread the money so that we've not got a high risk of any investment. So we've got, as I explained, about the monthly reports, and we'll look at the members that we've loaned. We are currently working on some different ideas to try and advertise and promote members taking out loans more, and to get more people obviously to join the credit union, because for each person that joins, obviously the cost for us that are members will decrease, and therefore the dividend that you may get on any monies that you hold with us will increase slightly. So that's always our game, is to minimise that cost as much as possible. But obviously if we can have a bigger organisation, then the costs shared per member are reduced, and it's a better return. On page 5, there's one bit that I need to correct in the report. So we've got the loans to share ratio and the loans to members ratio, which are both down slightly. And the figure that I need to correct is the balance of loans, because that paragraph's actually incorrect and is last year's figure. So the correct figure is 2,242,104 for the balance of loans, owned by 696 members, which represents 27.5% of the credit union membership. So that's the only amendment that I wanted to make in the report. What I've done this year is I've included some figures that have always been recorded by the auditors, but I thought from my point of view it was good to put in my report. And that was just to mention about our total income, our total expenditure, the net profit, and then after all our liabilities, what the profit is that we've available. We do have to put some money into a general reserve, and then we can make a decision on a dividend payment as well, and come on to that in a moment. But you will see there that the cost for 2016, 41,870, and 2017, 58,498 have gone up, and that's partly because we have kept making a commitment. Whilst we're in the premises of the trade union, as a credit union limited, we are a separate business here, and we have made a commitment that we will continue to provide additional funds towards the trade union for the fact that we're using the premises and facilities at a subsidised amount. So that will keep gradually increasing, which is another reason why it will be good for us to try and increase the membership and to try and increase the amount of loans, as that revenue will help to offset the additional costs that we're going to get. And other than that, all really to say at the very end is that overall we're in good financial health.
Any questions on the Treasurer's report?
On the Aldermore Bank investment, either you've got a lot of interest out of that, or you pumped another 100,000 into it. Which was it?
Another 100,000 in there, but we've got 3,000 interest approximately on the 152.
Yeah.
So that's the reason why you'll see some of them figures have gone up and some have gone down.
Yeah, no, I was just looking at the
Yes.
obviously
Yeah,
very
that's right.
increase. But yeah, I mean, so Aldermore, is that one of our better interest returns?
It is, but it's a riskier product, is the problem with it. We have got Castle Trust is another one, where we only get a guarantee on our savings. So the normal guarantee that we would get would be up to £85,000 on monies in a particular account. With those two types of investment, we get a slightly higher return, about 0.3% higher, but we only get a guarantee up to 50,000. But as they're both organisations that have been going for a number of years, and having looked at the risk rating that doesn't show any concern, we decided we have this difficulty of trying to find places where we can, invest members' money.
So in all those investments, the maximum that if there were problems was the 85,000 you get there.
Yes, oh yeah. So there's a potential risk there, which is why we've had to spread that risk as much as possible. I think the highest one we've got, it's in the accounts, I think is about 3%. With Shawbrook, I should think, about 3% of our assets. But we try to spread that as best as we can.
Okay, thank you.
Any more questions? If not, do I have a move that we accept the Treasurer's report?
Okay.
I'll move it.
Moved and seconded. So we move on to the accounts. And I'd like to welcome Darryl Haynes from H.W. Fisher, who's come here to tell us all about our accounts. You have the separate document.
Joe, right. He's going to
All right, you can sit there.
It's all right.
You can sit there, it's fine. Sit down, Joe, sit down.
Sit
Sit down, Joe, you're all
No
right.
worries.
Where's he going then?
You go stand up here.
I think he's sitting on the line.
There's you.
I'll move.
Right, I'll come round here. So
Sorry, mate, I didn't realise.
That's okay. Right, hello everyone. Thank you for inviting me along. It's my first time this year, as you may have noticed, for those who have been before. I've taken over from Adrian Lapsley, who you've probably seen in the past come through and do this bit. We're the auditors of the accounts. We've carried out our audit, and as usual we will be giving an unqualified audit report, which means that we haven't found any significant errors or material problems with the accounts that we need to report to you. I think the board has already gone through the detail of the accounts and the finances. I can confirm that the figures that have been quoted today, apart from the odd exceptions that were picked up while we were discussing, agree with the accounts, which is in here. The key documents, if we want to have a quick look through the accounts, on page 4 there is the revenue account, which summarises the income and expenditure, which as I said has already been mentioned. At the top there's details of the interest receivable and interest payable, and then below that there's a summary of the administration expenses, the other operating expenses, etc., which are the costs that are incurred directly by the organisation. And then underneath there's the impairment losses on loans to members, which was discussed earlier. This is the amount that has been lost at the moment to bad debts and people that can't or won't pay, etc. Then down there, the only other figure that hasn't been mentioned is taxation of £4,763. The union has to pay corporation tax on the interest that it receives, and that amount that's payable is £4,763 this year, which comes down to the line that says result and comprehensive result for the year of £82,262, which has been quoted earlier. Over the page, on page 5, there is the balance sheet of the credit union at the end of September. This is purely a snapshot of all the assets and liabilities of the credit union at that date. At the top it lists out all the assets. These are mainly the loans to members, the investments with banks and building societies, and cash and other cash that's held at bank. And then below there are a few prepayments and a bit of accrued income, which is also an asset. Prepayments are items where you may have paid an expense in advance of actually incurring that expense, things like insurance, which you have to pay in advance. And accrued income would be things like interest and so on that you've accrued but hasn't yet been paid over to the union at the end of the year. Below then, you then have the liabilities of the credit union. These are amounts that are owed to other people. The main liability, of course, is the member shares, which are classified as a liability of 4.8 million. Then there are other payables, which are other sundry creditors that are payable by the union at the year end. And then the main creditor under liability is the member's dividend, which has been accrued for. The dividend that's proposed to be paid on last year's results is there as a creditor, it's accrued. Overall, the net assets of the union at the end of the year were 559,000, compared with 476,000 in the previous year. And the reason for that figure has gone up is you have made the £82,000 profit, surplus for the year. And those reserves are split into a general reserve of 257,000 and the revenue reserve of 301,000. And the reason for the split is you have to, by law, maintain a reserve of a specific amount to maintain the credit union's financial position. Okay. After that, there is a cash flow statement which shows in cash terms how the cash has moved from one balance sheet to the next. I think that's relatively straightforward and doesn't give any further information on the result for the year. After that, there are a lot of notes. I don't know whether anyone has any specific queries on the notes of the accounts. I think the main ones that we've already looked at are in respect of the members' loans and the movement on the bad debt provision. There are also notes giving a little bit more detail on the administrative and the other operating expenses on page 9. I think those are all the key points that I wanted to point out on the accounts. I don't know if anyone else has got any comments or questions.
The administration charge is a bit vague. It just says administration charge, which has gone up by, goodness gracious me, about 25% on this year. Is that the charge to we pay to the union to our costs to try and wean ourselves away?
That would be, wasn't it? Yes, and that has gone up. As we said earlier, that's because it is the intention for the credit union to stand on its own feet more and more each year, so there has been a conscious effort to pay a little bit more. As has already been mentioned, the union does actually support the credit union quite a lot in terms of the office space and staff costs and so on, so in actual fact the administration charge would be a lot higher without that support, so it is just a matter of just gradually paying a little bit more every year to get to the point where the union would be totally self-sufficient. I think it's a little way away from that at the moment.
Any other questions? If not, do I have a move that we accept the auditor's report?
So moved.
I've got Stephen and who's second it?
I'll second it.
All in favour?
Just got one question. Are the board of directors allowed to vote for that? Because they've got a vested interest. You can't vote for something when you've got a vested interest, surely.
Remember, it's not the directors.
I'm a member.
I'm a member
Not the
too.
director.
I'm a member as well. You guys vote then.
Well, quite happy for the floor to take it rather than
The floor wants to
just
take it.
to
It looks a bit more genuine.
yeah, for the avoidance
Yeah.
of doubt then, can we have a
Yeah.
proposer and seconder from the floor?
Yeah.
Wally, anyone? Sure, over the back.
Who's the Pat
Pat
Collins?
Collins.
Pat Collins, yeah.
Oh, I've got his name now. It's a question.
We should try to get that confirmed for next year as well. whether
Yeah,
next
we'll
year
actually
or
look into that,
not.
so-
If you remember, you decided you were sitting the board of directors and volunteer to do what you're trying to do, whether it's like they're receiving profits from the credit
Yeah.
union
Yeah.
or anything like that.
It's a valid point to make, but I think actually we are, but we'll clarify that for next year. Actually, let's
Move on to item 6, declaration
Thank
of
you.
surplus.
thank you very much, Daryl.
Thank you.
What we on to now?
Declaration of the surplus available for distribution and dividend.
Breaking news.
It's got BBC in there.
Would you like to introduce this?
Oh, you want me to? Okay.
Yes.
Okay, so the declaration for the surplus available for distribution and the Board of Directors' recommendation of application of the same dividend on shares. So the resolution that is being put before the meeting is that the audited surplus for the year ended 30th of September 2017 is £92,741. That's wrong.
Yeah.
That's wrong, isn't it?
Yeah, it should.
That's 82. So I do apologise. There seems to be some problems with the paperwork here. It's my fault.
82,000, yes.
Yeah, 82,242. Sorry about this. This is really embarrassing. Is it 242? Help me out here, Phil.
82,262.
262. Thank you. Right. Okay. Which leaves. Then leaves 774,000. Just bear with us for a minute, will you? Because I think these are all wrong, then, aren't they?
You don't know.
I know. I don't know why that, because I amended them and it hasn't come up. Treasurer, do you know what the figures are?
74,036
Right.
after the 20% is taken out.
74.
No, beg your pardon, it's not. It's less than that.
It should be on there, it should be in the report, shouldn't it? Have a look in the report. This is very embarrassing. It's that sounds about right, 66,000 something.
With 65,809.
There we go.
7% off.
65,809
809.
pounds.
With the
Which leaves
dividend cost should be correct, £44,441.
right. Okay. Okay, so I'll start again. I apologise for this. The audited surplus for the year ended 30th of September 2017 is £82,262, of which at least 20% must be held for reserve under rule, which then leaves 65,809. Out of the audited surplus, the amount £44,240 has been paid as dividend to members. The Board of Directors' recommendation is that 1.1% dividend is paid at the cost of 44,240, with the rest going to the credit union reserves after corporation tax. That the declaration of surplus is adopted along with the Board of Directors' recommendation and is paid on shareholdings. So is everybody clear on that? So basically we're recommending 1.1% dividend this year based on the finances that we've got.
That's a slight increase from last year when we paid 1%. Do I have a mover?
Do we have a mover from the floor? Yeah, thanks, Tony. Cheers. And a seconder? John.
John Ames.
Okay.
Move on to item 7.
The credit. Vote on it.
All those in favour?
I'm not sure if we can vote on it.
Well, I don't know, so why not?
Doesn't matter. Move on. Okay, so that's accepted. So the recommendation is 1.1 for this year. Thank you, everyone.
Move on to item 7, the Credit Committee report. Now, the Credit Committee's principal role is to ensure that we meet the guidelines, monitor loans to make sure payments are being made within the agreed schedules. So we're here to serve all of us and all of them out there as well. And we encourage members to adhere to their loan terms and conditions. But if for any reasons members run into difficulty, we advise that they contact the board at the earliest so that we can work out a plan together. However, in the event of gross default, we have not hesitated to use court action to recover our money, something that was raised earlier. So it just gives a record then. At the end of the first year in business, the RMT Credit Union had 305,000 on loan to 524 members. And now that's gone up. We've got the summary for the last 4 years. And in September 2017, the membership stood at 2,709 with a loan balance of £2,242,104 to 697 members, which is a small increase on the numbers with loans. And that's a credit committee report. Can I have a mover and seconder that we accept that?
Anybody out there? Can hear you breathing. Nobody wants
Mover?
Yeah, I'll move it if you're allowed to do it.
I take Pat Collins.
and
Pat Collins, second. Anyone? Yes?
Would it be, or have we got a data of how many court cases have we had and how many recovery operations have become successful, or a ratio of the success of the recovery?
Not to hand we haven't, no. But it should be possible to provide
You
it.
can come downstairs and after.
Yes.
That's fine.
If I may, I mean, what happens every board meeting, every month, we get shown all of the figures of every single person, if they've defaulted on, what the outstanding amount is that we're owed, and then what action. So it may be we've reached an agreement with the person about how they're going to repay, that we've referred it to court, or that we've got debt collective agency, and we discuss all of that each month, and all of that is listed when we have a board of directors meeting.
There it is.
Can I just ask a question? You know, for the people who apply for loans, do you go through a credit agency, a credit search agency?
Some we do, yeah. As a country, yeah, some we do. We don't just give it automatically.
On the sides of the loan, is it, or what?
It could be, or we could be going through the actual application form and there's something we just don't like, and we will do it. It doesn't mean, say, if you're going for a £200 loan, you won't have a credit check to a 5,000, 6,000, whatever.
No, I just wondered, you know, obviously to alleviate some of the bad debts, if people will credit check.
No, it does happen. Yeah.
And we have a supervisor with a report, so again, every month when we have our board of directors meeting, we've got somebody independent to the board of directors that's actually doing an audit and looking to check that we've got correct information for people and what we've had come back and any anomalies, and they report that to the board each month as well.
Thank you.
Can I just make one point as well? There are several members who are on that list where we have been to court, and the court has ordered to pay at the rate of £1 a month. It takes a long time to clear 7,000 quid at £1 a month. So those payers are on that list for a long, long time. But there are many that are gone back more or less to the contract that they signed in the first place.
Yeah.
They fell into arrears. Now they've steadied the ship and they're paying again. Okay, move on to the supervisory
I
report.
think I'm covering that, aren't I? Yeah. Okay, so I'm covering this on behalf of Carwin, who unfortunately couldn't be here today. He was here earlier but had to get away because he's got something on this evening. Sorry? So the Supervisory Committee has carried out its duties at least one every month. These have comprised checking all new members' accounts, checking with the Acumen system which we use to ensure bank account details, signatures, addresses, etc. all tally up with the hard copy of the application form, checking existing members' details at random, checking members' withdrawals and loan applications, again making sure they are accurately entered on Acumen by means of checking the withdrawal loan forms. Particular attention is paid to unusual patterns of transactions or unusually high transaction amounts, as we need to do for the money laundering regulations. Submitting a monthly report to the Board of Directors with appropriate recommendations. Checking any actions required by the checks have been carried out. These are invariably done immediately so they can be checked on the spot. And the purpose of these checks is to ensure compliance with all regulations and directives laid down by the FCA, and that any omissions or errors are quickly corrected. And this concludes the supervisory report.
Can I move that we adopt the supervisory report?
Yep. Wally, thank you.
Wally, thank you.
Secretary
Seconder.
GC, thank you.
Seconder, please.
GC.
Appointment.
Oh, sorry. Yeah, just to amend that. Is that I was actually speaking for Michael Isaacs, not for Carwyn. I do apologise. Who's unfortunately in hospital. He fell over on the way here and has injured himself. So I'm sure we'll all send him our best wishes. Sorry? Well, let's
move on to item 9, appointment of auditors. And there's another typo there. I think there should be 2017-2018, shouldn't it? That we appoint H.W. Fisher & Co. as our auditors for 2017-2018.
Just one question, how long have they been our auditors now?
14 years,
No, they haven't.
haven't they?
no.
No, the guys in Scotland were before.
Oh yes, of course they were, yes.
It's 4 years?
4 years.
The 5, 6 years? Okay. Who asked that question?
Totally.
5, 6 years.
Yeah, so a few years.
We change auditors and, you know,
That's us.
at a regular basis or whether,
It-
you know, what we
There's no set pattern to it, but you know
No.
we're always. I mean, so we're always looking because obviously they provide a good service. But sorry.
We do get asked if they from other auditors
Yeah, we
provide your service, and we check them out as well. So
Is it direct
it's not natural we go along with the same one year and year and year. We get asked if we can come and audit. and then they say this is our portfolio.
Yeah, it's not no tying all
No,
to the same brush, but if you know, we've had a few discrepancies during this year of auditor service, and I just wondered if, you know, we, not this credit union, but I mean PricewaterhouseCoopers, and
Yeah.
some of the bigger ones,
Yeah.
have all put in court this year with false reports.
Yeah.
And so I just wondered if, you know, if you change regularly, that's all, 5 years or 10 years or whatever.
that can happen. We can change our auditors if need be. Yes,
Vic.
we can. But
I'm chairing the meeting. Sorry.
Commissioners are the auditors for the union as well. They audit the union's accounts, and they get the labour movement, the preferred auditors and labour movement, as opposed to say where there's discrepancies, maybe private enterprises. I don't think that would happen in labour movement as such. That will raise one audit issues.
Yeah. So I think the answer to your question is no. There's no specific pattern to that.
Do I have a mover that we appoint H.W.
Just
Fisher?
before that, are the auditors audited themselves? The auditors.
the auditors are behind you.
The auditors are behind you. You ask them.
Well, the FCA,
They're
isn't it?
behind you.
They're behind you.
Who audits you?
Yeah. What's your quality assurance? It's the FCA, isn't it?
No, well, it's twofold. Anything that we do as a firm is checked regularly by the Institute of Chartered Accountants. They have a quality assurance division, and they come in and review what we do, not just for your audit, if it's PIG, but across the board. They'll look at our systems, they'll pick a sample of the audits we've undertaken, review the files, check the judgments we've made, and make sure they're happy before they give us our certificate to carry on for the next period of 2 or 3 years. That's who checks us.
There you go. Answer the question. Thank you. Cheers.
You got it then.
Now do we have a move that we appoint H.W. Fisher?
Can we have a mover from the floor then? Come on, let's have a hand up. Someone different. All right, GC and Patrick Michels.
Thank you. Now I'll ask either if you'd be Carwyn again.
Okay, this.
Oh,
You've got the report?
This one's
Don't-
Carwyn.
I haven't got it on here.
Yeah, money laundering report, mate.
No, that'll do. I'll use this one. Okay, so this time I really am representing Carwyn. It's the money laundering report for the AGM December 11th 2017. The anti-money laundering and counter regulations are high on the government agenda, and all directors of the RMT Credit Union, that's us, are made aware of their responsibilities concerning the credit union's policy and procedures to prevent money laundering, and we do actually undergo some training for that. Those relevant members of the RMT Credit Union who are suspicious of any irregularities with money deposited with the credit union must follow the reporting procedures and complete the necessary forms that are available from the money laundering reporting officer, who will forward the information to the National Crime Agency via a suspicious activity report. Due to the regular pattern of the savings in this RMT Credit Union, the suspicious deposits should not be difficult to detect, and incidents of this kind have been minimal. Basically, we're very low risk on the money laundering side because we've got quite an enclosed membership within the trade union movement. They tend not to deal in hundreds of thousands of pounds. But we do have to be aware that that may be a possibility, and so we do have a policy and a framework around which to look at that. So this concludes the money laundering report. Sorry, get that back now.
Do I have a mover and a seconder that we adopt the money laundering report? Pat Collins?
Pat.
Andy.
Andy. Now, elections. We've got one vacancy on the board, caused by rotational retirement of directors. Now, we haven't had any nominees in advance.